All right, Mark here, and thank you for watching another Greenbridge Investing market analysis, technical analysis. So in this session, I'm going to be going over what the charts look like to see if we can gain some clues and perspective for the week ahead, and to see what could we have on our radar for any potential buy or sell signals. All right, so with that being said, as you know, this is being streamed live. Thank you for joining me. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, today's a holiday, so the markets are probably going to be a little quieter than usual, okay? On a Monday, we always go over this. It's important to be aware of what's going on in terms of economic events. Now, as I mentioned in one of my recent articles, we don't trade on economic events or on fundamental information because we're only interested in short-term momentum. But it helps to be aware of what's going on, because if you're in a trade, especially a Forex trade, this information can be helpful in terms of managing risk. And that's all we're interested in. So, it's pretty quiet. Earlier in the week here, we have this Governor Paulo speech from the Bank of Canada. Okay, no one cares. We have consumer prices, Germany, not a big deal. Okay, we have GDP for the US on 5/28. So that's in 3 days. So what is that? What is that, like Thursday or Wednesday? Okay, that's at 8:30 a.m. Eastern time. And that can move the S&P and NASDAQ if there's any dramatic surprises. Now, here's something you have to keep in mind. If the number comes out negative, obviously they're expecting a negative number, and they're also expecting bad jobless claims as well. But if the numbers don't come out as bad as the market has priced in, then you will get a positive effect. People don't understand that. They think logic, oh, it's a bad number, so the market should just go lower. But if it's not as bad as the market thought, then it's actually not a bad number, okay? So again, we don't trade on that information, but it's good to be aware of, especially like, for example, we're trying to get involved with IWM puts on the short side, on the long side, or short calls. And, this information can affect that type of trade because it will affect the NASDAQ and the S&P if there are any dramatic surprises, okay? So just to be aware of. The rest of the week, you have for the Eurozone here, consumer price index, and these are inflation numbers. So I don't know, unless there's anything really dramatic there, that's going to affect the euro, obviously, maybe the pound, but I wouldn't worry about those numbers. There's really nothing here that's that dramatic. The biggest things that we always have to keep an eye out for are NFP and any FOMC meetings or any interest rate decisions by other central banks. Okay, so pretty quiet week in general here. That's good for trading, actually. All right, now let's get into the chart. Again, hey, Michelle, how are you? Thank you for joining me. So if you have any questions while I'm doing this analysis, please feel free to ask. I have some requests for some specific charts that I'm going to cover in this session. If you have a specific chart as well, please just share in the channel here and I'll get to it. For those that are new and just finding out about Greenbridge, we do provide trade signals, but I do not share them in these videos. Those are sent out to our members by text and by email, okay? But I will go over the result of them, or if they're in play, how we're adjusting, okay? So with that being said, let's begin here with Bitcoin. Now, Bitcoin, like I've been talking about in previous analysis videos, we've been anticipating the triangle, right? The consolidation pattern, which the market is pretty much giving us. Okay, that's good. But thing is with triangles, right? That's basically a symmetrical triangle. These patterns are typically trend continuation patterns. The trend is still defined as bullish based on this 76.95 support. Okay, none of that's changed. Now, this is now in a much better position for a long, location-wise, than it was on Saturday. On Saturday, we sent out a trade signal, a very aggressive trade signal for those that were interested in that type of risk. We were clear that we were not going to take it. The thing is, the trade never triggered. It was based on this pin bar here. All right, and the trigger was 93.25. Now, I had a question about this in our free chat room about the trigger of the inside bar. Technically, yes, the break of the high of that inside bar, which was 92.72, so basically like 92.73 or 74, that would be the trigger, right? But we don't take those triggers because they're too obvious, and the whole world also takes those. You don't want to be involved in those. So what we want to do is to help filter out that noise, and we make the market work. So we set the buy trigger higher. All right, usually like maybe for Bitcoin, sometimes 50 points higher, which is basically what we did in this situation, and set it at 93.25. Now, as you can see, the high here was 93.16. So it missed the trigger by like 9 points or 9 ticks or whatever you want to call it, $9, right? And then it failed. So that saved us. That filtering method saved us from taking this pain, or, you know, if you're on a smaller time frame, getting stopped out. We only trade daily charts for our long-only swing trade strategy, so that was fine. If we were in that trade, then probably the stop would have to be wide, so we'd probably still be in this. But okay, that trade was never active to begin with. All right, Michelle, which would be a sell BT signal that prepares us for a low 8K? Well, the break of the low of that inside bar, it's a good question. So you take out the low, that's actually a sell signal, which is what the market produced here. But when you're inside of a range, buy and sell signals cannot be weighted the same way. All right. First of all, the trend is bullish, so we're going to put more weight on buy signals than we are on sell signals to begin with. Okay. Hey, great. Hey, Reese, nice to see you. Thanks for. I know you're like, you know, some crazy hours over there. Right. Thank you for joining me. Okay. So as I was explaining, we don't weight the signals the same. The buy signals are going to carry more weight, but the location is also going to affect how we make a decision. We are now near the range low. 8,500 is the key inflection point that's in play. Today's candle low is 86.30. Okay, that's close enough. That's decent. All right. Now we're getting, this is not exactly an inside bar, but it's similar. I mean, we're slightly lower than the previous bar, but this is a similar idea, so it's acceptable. Plus, we're at a much more attractive location. This is not the middle of the range. This is near the range low, and we are in what looks to be like a triangle, or this symmetrical triangle type of consolidation. So this can turn into a much more attractive long swing trade signal, depending on how it closes and what the next bar does. So if we close like this, you know, we still have a few hours before it closes, you know, a high of 89.50, that means probably we'll place our trigger around maybe 89.75 or maybe even 9,000 or maybe 90.25, really make it work to trigger, okay? And the stop would probably have to go much lower, you know, 8,300, something like that, based on this low here, not this low, because this is where everyone is going to put their stop. You don't want to put your stops where the herd puts their stops. Okay, so that's what we're looking at for Bitcoin. It's not a buy signal yet. It's still a little premature, but it's a much better location than this. Okay, so we would classify this as much less aggressive. All right, does that make sense? So I hope that answers your question, Michelle. Man, I've spent a lot of time on Bitcoin. All right, so let's go into the next market here. Again, if you have any questions, please just share them in the channel. I want to talk about the NASDAQ next. So what we're looking for, again, is the week ahead, right? We're trying to get clues as to how to prepare for the week ahead. Now look at the NASDAQ CFD, right? We had this pin bar close on Friday, which we said that's a sign of strength. Even if the market was slightly negative for the day, doesn't matter. This is a pin bar. Now, the location is risky, but it closed on a sign of strength, and it followed through. So look, we pushed to a new high overnight, you know, Sunday into Monday. Now, volume is low, so this breakout doesn't carry a lot of weight. This means that, you know, if you're a futures trader, if you're day trading, okay, fine, you know, you can make use of this. If you're not day trading, then this is a very vulnerable area to be taking this type of breakout, because how much further is this going to go? Okay, especially if, you know, there's any type of news that comes out between now and you know, the market open tomorrow at 9:30 Eastern time, things can change a lot. So this is a vulnerable area. We wouldn't be going aggressively long into this. Now, if you're long stocks, like, you know, we've been rotating in and out of, great. This is a great sign. Just let it ride. But this is not really a good place to be taking new positions, especially since we're now getting closer and closer to this 9,700 peak, which you better believe people are going to be selling up into that. Okay. Got a question for Reese. Will we watch? Okay. What are your thoughts on, okay. All right. Good question, Reese. I'll get to that as I come to the close of this. In fact, I was actually thinking about doing a webinar on oscillators on Sunday to kind of give people an idea of where they're useful and when they're not. So that's a good question, but I'll answer that. I've been trying in Forex and commodity markets also. What is your experience on backtesting? All right, good question. All right, Reese, so I'll get back to your questions there. Let me just get through the charts, and thanks again for asking. So that's the NASDAQ. All right, so again, like I said, great if you're long stocks. If you're not long stocks, there's really nothing to do here but wait. Okay, we want to see a pullback, and we can get pullback. The main levels right now we're looking at is around this level here, based on this low, which is what is that, 88.55 area. So basically the 88s or this 8,300 area. Okay, the 8,300, this 8,350, that right now it's actually a little bit. This line should be a little higher. But this is the key support for this entire structure. As long as the market is above this, we can classify it as bullish. And we have nothing but higher lows along the way here. So that all makes sense. We just have to be careful. Reward risk gets unattractive the closer and closer it gets to the 9,700. All right, so that's the NASDAQ. Again, if you have any questions, please ask. I mean, we're starting off on a strong note, you know, tomorrow, and we'll see where this thing goes. We can't go into this with any type of opinions or preconceived notions. Like a big mistake I used to make years ago was I'd say, oh, look at this resistance back here. Oh, this thing's too high. Ah, it's a short. This is not a short. There's no reason to be short this. There's nothing that says sell this right now. Nothing. So you can't get in this thing's way. It wants to go higher. No opinions, no bias. Let it do what it has to do. When it turns, it'll give us a clear signal. Now, a lot of times when a market peak occurs, it'll come out of nowhere. So we're not going to know until probably a few bars after the fact. That's just the way it is. All right, so that's the NASDAQ. Now, real quick, I'm not going to spend a lot of time on this one, but the DAX, I go over the DAX for our Eurozone traders and investors. We watch the DAX. In fact, Andrew mentioned a swing trade on the DAX CFD. And like I always say, this thing follows the US markets, right? So we had this range developing around, what is this, 11,200? Something like that, right? And it was at that range high. Look, nice breakout. So again, that's why you can't really be you can't have like a bias with these things. This thing has been demonstrating strength, just like the NASDAQ and the S&P with its higher lows. We have now a little higher low in here, just like the NASDAQ, and now a higher high. Okay, great, strong. Now, relatively speaking, this market is not as strong as the NASDAQ or the S&P because it's nowhere. The NASDAQ, relatively speaking, is way up here, and this thing is like in the middle. So if the NASDAQ sells off, you'll see the sell-off here. So what does that mean? Well, if you're in European-denominated assets, this is, again, another opportunity to partial out, take partial profits, reduce risk, maybe reduce some exposure to tickers that are not performing well. This is your chance to get out of them, okay, even for a smaller loss, because when this thing turns, you're going to be like, oh, I should have gotten out, blah, blah, blah. That's really all this offers the opportunity to do. I wouldn't be going crazy buying European-denominated assets in this situation because of the relative weakness. All right, the Eurozone is not exactly in the best situation fundamentally. Now, again, we don't care about that too much, but for the short term, you know, again, this is an opportunity to reduce risk, not to add risk. We want to see a pullback of some kind for a buying opportunity, not this type of breakout. All right, so that's the DAX. Again, following the S&P, nothing really unusual there. Now, let's take a look at oil. I have oil, gold, and the euro I want to take a look at. So let me begin here with, hold on, let me see. Yeah, we'll start with gold because gold has been interesting. All right, then we'll take a look at oil, then we'll take a look at the euro, and then I got some stocks from, from people. So let's go to gold. Gold is something that we've been very involved with. Andrew, obviously, he's an expert in gold. And look at that triangle, right? That's the triangle that we've been talking about with Bitcoin, which it's not exactly like that, but it's similar, right? And you see the nice breakout. Gold ran up to that, what's this high here? 1765, not a place to be buying, obviously. Got a bearish pin bar after that. And now you get this little failed high situation. And now we're starting to develop something here. Okay, this is interesting. We have an inside bar, right, the green one, followed by this pin bar. Is this a place to buy? It's not a bad place, but it still carries some risk. Here's the thing. A lot of times when you get these consolidation breakouts, the best place to buy these is a retest of the boundary. This is the boundary right here. Okay, you can project that further, and that's the boundary. As you can see, some buying is coming here, right? There is some buying pressure taking place, but we're not exactly on that boundary. Does it have to be exact? No, there's no precision. So if you buy something like gold, this is a possible aggressive swing trade long if you take out the high of this inside bar, which is 1740. But you have, as far as risk, you have two reference points. You have this one, which is a low of basically 1717, or we could say 1715. It spent a lot of time in that area, which means you have to put it slightly lower, because if it touches 1715, you get stopped out. So you have to put it at like 1695 or something. I mean, that's what you're looking at. 50 points of risk or more, right? If you're taking this thing at a break of high, what is it, 1740? So you're looking at like more like 70 points of risk. That's a lot, okay? I'd rather see this thing test a slightly lower price and then give me a pattern like this, because the best place to put your stop right now in this situation is like 1650, all right? That's what got, we had a gold trade, and we got through that trade even throughout all this noise by having a very wide stop. So you have to be prepared, even on a micro lot. I mean, this type of stop could be expensive. So you have to be prepared for something like that. We'll talk about that more if we decide to do something with this. But personally, I prefer a little bit more of a pullback, okay, because of the situation. Now, is gold bearish? No. Gold is clearly bullish. It's just a matter of it's got to consolidate, get through some noise, and then begin its next leg higher. When this thing pushes that 1765, the 1800 level, shouldn't be that tough for it to reach the way this thing moves. Okay, so that's gold. Keep an eye on that, and keep an eye out for a potential buy signal. Now, let's get into oil. All right, oil is, there's a couple of different symbols for oil. I'm going to be looking, well, I'll just look at both of them very quickly. So we have the WTICOUSD, which is Owanda's symbol, which is a nice clean chart. We talked about this bullish pin bar on my previous analysis, okay? And again, some people may interpret that as bearish because of the location, but you can't ignore the fact that buying came in and reversed the candle, right? And now look, we took out the high of that pin bar. So oil is still strong. You can't really chase this. This is tough. All right, now let's take a look at a more realistic chart. And what I mean by realistic is the one that pretty much everyone else sees, which is WTIUSD, okay? And is that it? No, hold on, that's not it. It's USD, WTI. I never get that symbol right. Yeah, this is the one. This is the one that most Forex brokers show. And, again, this is a tough spot to take the trade, because where's your next support? It's back in this area, around that 24. So you have to risk like what, $10? The high here is 33.98. So you're buying this thing at 34.25, and you're putting the stop at like 24. Most people will put their stop at this low and say, oh, 30.5. But that's an easy low for this thing to reach, and you will most likely get stopped out just on noise. So that's really not worth it, okay? We're inside this gap. See this gap back here? That's going to act as a resistance. So we're going to be watching oil carefully this week, for a potential buying opportunity. It may give an aggressive long signal, but we're going to have a wide stop on it, which means 1% risk for sure. All right, because there's no point in getting stopped out in the noise. These things can be very noisy. So we're watching this, again, that breakout would have to be basically, 34.5. So maybe in this case, we'll give it 34.25 since that's the higher, that's about 25 cents higher than this pin bar, right? That's what we're looking at, all right? Now, oil, again, is a highly manipulated market. At any point, some news can come out and it gets hammered. That's why, there's no point in taking a 10-point stop if, we're only looking for like 8 or 9 points of potential profit if it can get through that gap. And that's where reward risk really comes into play. I don't care if it goes a little higher, right? If it's not worth the risk, it's just not worth the risk. You'll never make money taking more risk than the type of reward that is reasonable, right? And that kind of estimation is very important. All right, that's oil. Again, if you have any questions, please feel free to ask me as I'm going through this. For those of you that are new, you can check out greenbridgeinvesting.com. You can join us there. We have chat rooms and you can ask questions in there as well. That's where we talk more about the signals and stuff. Now, let's go over the euro. All right. Now, I sent out an article about the euro. And here's the thing. So the euro is in a very clearly defined range. We can go back to the dollar index and we can be like, oh, yeah, it's in the dollar index as well. Okay, that's nice. But here's the thing. People may say, oh, all you have to do is put the order, put a sell order up at the higher part of the range, put a buy order at the lower part of the range, and it's easy, right? Your job is done. It's not that easy because of the randomness. We don't know when this is going to break out. We don't know if it's going to go to that low and break lower. If it does, or turns and breaks higher, if it does, the move can be dramatic. And that's how it works with these things. So again, we don't go into fundamentals because we're only interested in short-term momentum. Yeah, the Eurozone has a lot of negative fundamentals, yet it still holds 107.5. Does that make sense? No, but it doesn't have to make sense. We're not looking for logic. We're looking to capture momentum. So for whatever reason, buyers step in there, and that's what we want to see again. Right now, we are in the middle of the range, around this 109 level. The middle is the worst place to take a trade because it's the most random when you're inside of a range. Anything can happen here in the middle. So what we want to see is a retrace into the mid to high 107s, perhaps the low 108s, and then we want to see price action that looks similar to this, okay? Inside bars, pin bars, some sort of indecision, holding that support level. We will be open to another long. There's potential there for at least 100 pips, 150 pips, since it's a 200 pip move to the range high, right? All we're looking for, we're very happy with 100 pips, 125 pips, which is within reason. So that's the plan for the euro, all right? So there's nothing to do here but wait. A lot of times waiting is the best thing to do. Now, I had a request for the pound, all right? And then after the pound, we'll take a look at a stock. So here's the pound. Let me see if I have a clean chart. There we go. So the pound is interesting. It's been kind of doing its own thing. Usually it tends to follow the euro somewhat, but here it is. It had this nasty pullback, and now we're getting a higher low off of this initial push, this initial bullish movement here. What I like about this is it's not much lower than this low here, which is 21.65, right? That's the low. This is a failed low because it's barely lower than this low. I like this. Not only do we have the failed low in place, but now we have a pullback and it's holding that failed low configuration. This is a very nice long candidate for a swing trade. In fact, it's much better than the euro. So we're getting an inside bar here, right? We close like this. This is very likely we send out this swing trade tonight. 22.03 is the high, so maybe 22.15 would be the trigger, something like that, okay? With a stop around, what is this, 20.75? So maybe a stop around the 20.50 or 20.60 area. I'm just giving you a general idea. The official trade idea will be sent out, obviously, by text and by email to our members. But that's basically what we're looking at. This thing's got a lot of potential. I mean, look at the range high, right? What is this? What is this high? 126? and a half. Plenty of potential in there. And overall, the nice thing about this trade too is overall this entire consolidation structure, let me see if I can draw that really quick here. This entire consolidation structure from here to here, this whole thing is just one giant higher low, okay, relative to this low. So nice structure, nice position, nice market position. So that's a possible swing trade candidate right there. Thanks for asking for the pound. All right, now let's take a look here at well, yeah. So Michael, yeah, we're gonna probably, you know, I know I believe Andrew sent something like that out, but we'll probably have to reissue this one most likely. So it's still a good trade. The idea is still good because I mean, look at that. Okay, Reese, you often say failed low because it's not much lower. Is there a percent? Well, that's a good question. I mean, you could say it's within 30%, within 30% of the previous low. That's really what kind of makes it a failed low. All right. But I mean, a lot of times you keep it around there and that's the kind of effect you will see. It's not an exact science, but if it's relatively close, it's a failed low. Because what the whole idea behind that is it draws in a lot of breakout traders, in this case bears, who are watching their small time frames, and now they're caught short. And once they realize that no one else is selling this but them, they now have to cover. So they start covering, which causes more bears to cover, which causes more buyers to jump in, right? And that's what the squeeze, that's how you get the squeeze. And then the bears start getting margined out when it really starts to go. So that's the psychological idea behind that. All right, so great question. All right, Carlos, Aussie dollar, sure. I'll take a look at the Aussie dollar, and then we're going to take a look at the Johnson & Johnson, which was requested by Michael. So, and thanks for joining me, you guys, and asking questions. So let's take a look at Aussie dollar. Now, Aussie dollar tends to follow the NASDAQ, as we've been watching, right? The Aussie dollar has been strong, making higher lows, just like the NASDAQ, and higher highs. Now, this is a failed high. You have a little bit of a failed high situation here. Yeah, okay, no problem, Reese. And here's the thing. So this could turn into a buy signal, right? But we're at an aggressive location, and that's a little bit of that's what makes me hesitate on something like this. Similar to the NASDAQ at 9,700, you have this level here, right? This peak, which is what, 66.85, and that resistance can be problematic in terms of measuring my reward risk, because how much potential can I expect? Is it reasonable for me to expect this thing to just clear right through that resistance if I buy this thing on some sort of breakout? It's going to be tough, right? It's an attractive place to sell and to lock in profits. So for that reason, I'd rather pick the pound over the Aussie if I'm going to take a swing trade, because the pound has a lot of room ahead of it, while this thing does not. Now, that doesn't mean that, you know, I'm going to be right and that this thing is not going to just clear the resistance and keep going. Anything can happen. But typically, though, if I see a resistance like this, it's an attractive place to sell, that kind of reduces the potential. Does that make sense? So that's why I would, you know, although this is strong, if you're in it, I mean, great, it's strong. But this is a tough one to take new trades on because of that lack of potential, especially since my first reference point for measuring risk is here, okay, which is 64, basically 64.15, or we can even say 64 even, just to make it work a little bit more. And that's my first reference point for risk, which is kind of wide, right? With 200 pips to hopefully make like 100 or 150 doesn't make sense. Does that make sense? So that's the Aussie dollar, okay? Now, let's get into J&J. Great question, by the way. Let's get into Johnson & Johnson. This is obviously a very popular stock. Andrew talks about this all the time. All right, now, Johnson & Johnson is typically what I would call a market stock, all right? Now, obviously, it's going to be affected by fundamentals that are relative to its sector, which is obviously, you know, pharmaceutical, biotech, that kind of stuff. And, you know, that stuff's really been in play. With all that stuff aside, right, I'm looking at this more from a swing trade perspective rather than an investment perspective. And this is what I see. Number one, you got a double top. Now, if you notice, look at this V shape, right? Going back to like February, you got this nasty V shape. You see that? I mean, that looks similar to like this. This is the type of price action I'm expecting, like with the NASDAQ and with the Aussie dollar. Same type of situation. It completes the V. Now, it went a little higher than this previous resistance, but as you can see, selling activity came in, right? Okay, so why? So great, we don't buy in that area, no problem. Pulls back, and then it tries again. Okay, this would be like a potential, something like this we would be interested in as a buying opportunity, right? But it failed. It didn't even go to the high. It made a lower high. So what does this mean? Well, it's acting relatively weak with the NASDAQ and the S&P and the Dow holding and you know, pretty much staying near their highs. This thing, what's going on here? Shouldn't be doing this, right? I shouldn't be seeing a lower high. And it's also testing this previous support here of 144. What is that? 144.30. So those are problems, okay? Those are signs of relative weakness. Now, is J&J a bad company? Of course not. But in the short term, there's some weakness here. If we shouldn't be testing support, number one. Now, number two, we can also, I mean, I'm looking at it from the weak perspective, but we can also look at this from a bullish perspective. And that is this section right here can be a broad higher low consolidation. I mean, it can also be interpreted that way, which can be a sign of strength in general. But why is this thing not performing with the market? That's really where it becomes questionable, right? Why aren't we pushing highs? Or maybe there's some news involved, whatever it is. So for that reason, I would wait before doing anything on this as far as a new swing trade. I'd let this thing find support. Now, in terms of location, is it in a bad area for a new trade? No. This is not a bad area. I mean, I'd rather buy nearer a low, especially a broad higher low, than a high. But the current momentum, though, is bearish. So I need to wait for that to turn. I would like to see a reversal candle. I would like to see a bullish pin bar instead of this bearish price action. We don't even have one green candle here, right? I would like to see that, and I would like to see it around the low 140s. So if you get something like that, okay, and it's not much lower than this low, which is this 144.31. So if you're looking at 143s, 142s, something like that, and you get a bullish reversal, it's not a bad candidate for a swing trade long. All right, we just have to keep in mind that if it's acting relatively weak to the general market and the general market has a broad pullback, then you will see something like this again, right? I mean, what was going on with the general market when J&J pulled back like this? What was going on? The general market was selling off dramatically, right? Which means it follows the market. What was going on here? Well, the market was recovering with all the stimulus, and J&J was obviously benefiting from all the biotech stuff going on as well, right? So, you know, it generally follows the market. We know that. So that means that if the market sells off, you're going to have a problem with this one. If the market continues higher and this thing finds a support and turns, then this will make a good candidate. I know that was a very long story there, but I hope you found that insightful. All right, how long have I been talking? I've been talking here for a while. Let me see. Wow, 33 minutes. Wow. You people like to hear me talk. No one likes to hear me talk this long, not even Andrew. Okay, so does that answer your question, Michael? Or yeah, Michael. Do I have any other questions about any other stocks you'd like to see or any other markets you'd like to see before I wrap this up? So pretty much the week ahead, you know, again, we don't have much news to go by, which is good. The market's starting off on a strong note, which is fine for our long trades, but we still have to be cautious. We still have to be careful because a peak can come out of nowhere and the market is in a vulnerable position. So although we're not going in with any opinions, we do have to be careful based on the location. We're not buying a low now. Now we're looking to, if we're buying any stocks, if any stocks are giving us reasons to buy, we're buying near highs. So we just need to we need to adjust our risk for that idea. All right, no problem. Thank you again, everyone, for watching. Michael, CTX seems to be at the range low, and it has been. All right, so real quick, I'll take a look at it. Let's take a look. All right. CTXS. Now, let me put that in here. CTXS. By the way, we're not doing a podcast today. For those of you that may be wondering about our podcast, usually we broadcast our podcast at 4:05 p.m. Eastern Time, which is in about a half hour. We're not doing our podcast today because of the holiday. So, you have this instead. Okay, so let's take a look. CTXS. All right, so you have a range low. Now formed some pin bars. Seems like, okay, so let's talk about that. Interesting. Well, you do have the range situation. All right, great observation, Michael. You do have the range situation, which was this, right? Tried to take out the high of the range, failed. Tried to take out the low of the range, and it's also possibly failing here, which is good. Yes, so I agree. You have some pin bars. This is actually a good candidate for a swing trade long. Now, it's an expensive stock. So the high here is 138.14, right, of the previous candle, right? The current candle, which was Friday's close, 137.73. So you're looking at like maybe 138, a break of 138, something like that. And there's a lot of potential in this thing. I mean, what's the high here? 154. So there's a good 20-point potential in there. You can't assume you're going to get the 20 points, but even if you get halfway, which is reasonable, that's not bad potential considering the risk you have to take. So yeah, Michael, thank you for pointing that out. This is a possible idea. It definitely fits the criteria. CTXS, Citrix Systems. So definitely one for the radar, and keep an eye out for the text message in that one. Thanks for pointing that out. And we had one more here from Reese. Okay, Reese, I know since it's like, crazy hours for you, I'll do this for you because, 3 a.m., that's a tough time to be watching stuff like this. All right. Could you have a look at Barrick Gold? All right, no problem. All right, let's take a look at Urban Outfitters. This is one that we had a trade in this one. I believe we got out of this when the market looked like it was turning about 2 weeks ago. We got out of everything. And this is the famous Michael top tick up here. He sold some up here. Every time I see that, Michael, I think of you selling that up there. So again, you have a situation where you have a range, a higher low range, just like that CTXS that we were just looking at. Look at this range, higher low relative to this double bottom low. Very nice range. All right. The thing is, again, the market needs to cooperate. The market's in a vulnerable position. You are right now in the middle of the range. All right. The middle of the range, and not a great place to be putting on a position. I'd prefer the range low, which is somewhere around here. What is this? It's 1467. So basically like that 14.5 area would be the ideal part. How did we miss this? I guess we've just been too busy. We didn't notice this one, but so this area here, right? That 15.25, 15-ish area. We want to see a retest of that, test of the range low, and a similar situation, another pin bar. That would be nice if we could get something like that, and that would prompt us to send a swing trade idea on something like that, okay, with some potential of maybe retesting that maybe 19.5 or $20 area, okay? But this higher low, this general higher low formation should lead to a break of a higher high if this trend reversal stays intact. Now, some people can argue and say, well, you're in a bearish trend, right? Because, you have this high here and this is a lower high and blah, blah, blah. And okay, that could be true. But the thing is, you had this lower high resistance back here around 16.5. If this thing was in a bearish trend, it never should have taken out that, which it, clearly took it out. Never should have taken that out. And it should never have found this support. So that's why that's a trend reversal in my opinion. So I would be looking for the breakout to the bullish side, especially if the NASDAQ and S&P can continue their strength. If the general market pulls back, perhaps we get a test of lows or something, and this could become another buying opportunity. So you have to keep an eye on the general market for the timing, okay? But as of right now, there's nothing to do here. So I like providing very long answers on things. All right, real quick, we got Barrick Gold. What is the symbol? I always forget the symbol on Barrick Gold. What is that one? Can you just give me the symbol real quick? Barrick Gold. What is that? Is that, let I'm thinking of a different one here. I'm going to see if I could type it in. It'll probably tell me. Barrick Gold. Oh, GOL. I should know that. Come on. What's wrong with me? It's Monday. It's early. It's a holiday. All right. I have to have some sort of excuse. All right. Well, wait, why is it giving me the CFD of gold? Hold on. I probably picked the wrong symbol. Barrick Gold. Hold on. Barrick Gold. I can't even type right here. All right, so GOLD. It's what I have here. Right, okay. There we go. I just had to put in the right, I guess I had to enter it the right way. So here's Barrick Gold. All right, now, ticker GOLD. So gold, this is a consolidation up here, right? As we know, the gold chart has been kind of pulling back slightly. This is a tough spot in my opinion because you have this resistance. What is this resistance? 28.35, and it's trying to find some support around this $25 level, but I don't like this because you got these failed highs. It's sort of like a triple top situation. Although gold is strong, we can't, there's no argument, gold is strong. This thing, I would feel better about buying it in terms of reward risk if it can maybe break this range and test lower, slightly lower prices. Maybe the 24.5, or ideal would be around 22.5. I don't know if you're going to get a test that low, but maybe somewhere in between that, like maybe the 24s or 25s, because first of all, that would produce a failed low relative to this structure. And I would hope that gold is turning as well. Now, so that's the thing. These consolidations can be tricky. If you buy it and it pulls back and gives you the failed low, well, you have to be prepared to take some pain. Over the long term, obviously, gold is strong. Like I said, there's inflation right now, and gold has no choice but to go higher, right, in an inflationary environment. So just on this level, I just think it's a little risky. All right, as far as swing trades, I'm talking about swing trades. Investing, I mean, if you have no problem taking pain, you could pretty much buy this at any price. At least you're not buying the high. But short-term swing trade, I would wait for a test lower, especially if gold, because gold can pull back slightly lower, and this can react, especially since a lot of longs will be piling in at this level around this support, right? And if they get pushed out, that's when you get your failed low and a potential long signal, in that area, which could be like I said, the low 25s or high 24s. That's what I'd wait for. If you miss it, hey, no big deal. There'll be other opportunities, and that's what you always have to remember. Okay, so good question there. Now, Nicholas, hey Nicholas, do you at all deal with altcoins? Okay, good question, Nicholas. We do have an altcoin portfolio. I don't talk about them much because they're pretty much, they all follow Bitcoin for the most part, okay? And we only look at the higher quality ones like Ethereum, Litecoin, and stuff like that. As far as swing trades, they're just not worthwhile. Bitcoin is typically a much better choice. That's why we only focus our swing trades on Bitcoin, and you won't see much anywhere else. Now, at some point, if that changes and the altcoins become much more worthwhile, then we will, we have no problem being flexible. But, we changed our whole website for that reason. We had a different website that just focused on, Bitcoin and the alts, and we saw that, Bitcoin is the only thing in play here. And plus we trade stocks and other things. So we want people to know, we don't just trade Bitcoin and stuff like that. So right now we focus our attention on Bitcoin for swing trades. And the thinly trade, the ones that trade thin, okay, like XDN, USDT. I'm not familiar with that. I mean, I'll put that in here real quick. Let's see, what is that? XDN, USDT. All right. Let's see that that's not it. That's a NASDAQ chart. What is that? No, that's the wrong chart. Sorry. XDN. Okay, I find it this way. Let's see. Against Tether. No, that's the wrong one. Hold on. Just give me a second here. Tether. Okay, here it is. This is the chart. All right, now again, these are a lot of random noise, really, just random noise. This kind of reminds me of like Tron. A lot of people, they make a big deal. You'll go on forums, you'll read all kinds of stuff, a lot of hype and a lot of pumping and all kinds of nonsense. I mean, and you'll say, oh, look, look at this move. And then someone with a newsletter will come out and say, oh, well, I bought it here and I sold it here and I made 200% in like 5 minutes. And you can too if you buy my, my service. So these are like penny stocks. They're really not worthwhile for investing or for short-term trades. That's why we don't bother with them, okay? You're better off, like if you're going to do swing trades, a more stable market like Bitcoin or even like Ethereum or something like that is much better than this. You'll see these random movements, but these are like lottery tickets. You know what I mean? Like so look, most of the time it's just doing garbage. Look at this. You're gonna sit there and watch whole days of nothing, and then one day it has like a move. So the thing with these is at some point, some of them, there will be markets that come out that prove themselves, like Bitcoin or Ethereum or whatever. There'll be some projects that prove themselves, and many of these will just go the way of many NASDAQ .coms, like the way they went, back in the year 2000. Most of them were worthless, right? And that's what we're expecting. So something like Bitcoin, stable, it gives us nice clean signals and it has a lot of potential. Great, that's the leader of the entire space. And until those altcoins prove themselves and their projects become worthwhile and they start trading on their own without the Bitcoin lead, then we'll obviously be sharing swing trades in more of them, just like we do with stocks or Forex or CFDs. But in this case, like I said, most of those are like penny stocks. And you're going to find people coming out with all these things about how great they are and this and that and that. Meanwhile, it's like a big gamble and they're very inconsistent. We're not interested in inconsistency. We want things that can give us consistent signals on a regular basis. Okay? So that's my long answer for that. Great question. And thank you for asking about the altcoins. So again, we do have a portfolio. If you look at our portfolio page, we do have a portfolio, but we've been basically taking partial profits and reducing our exposure to many of our alts and rotating that money back into Bitcoin because again, that's where the stability is. Remember, all of these things, Bitcoin and altcoins, are highly speculative. Remember that. These aren't like stocks. They don't have the same foundation as stocks do, or even Forex for that matter. Okay? So just to mention that. All right, so great questions. I think I covered everyone's questions. Okay, hey, no problem. Nicholas, that's what I'm here for. I'm glad you take the time to join me and ask the questions. So thank you all for joining me on a holiday. Again, if you're new to Greenbridge Investing, check out our website, greenbridgeinvesting.com. We have a signal service, we have chat rooms, and we have portfolio management ideas. You can check out more details on that there. You can also participate in these live streams that I do here. Remember, our signals are sent by text and by email, and we have a couple of candidates like the pound dollar and that CTXS, which is a possibility tomorrow. Other than that, have a great day, everyone. And again, there's no podcast today. Great, thank you. Thank you, Reese. No podcast today. We will continue the podcast next week. Have a great day, everyone. Take care, and thank you for watching.